All right, guys. So tonight's class is going to be about setting up your trading screen. Kind of like a guide of setting up your screen and some tips along the way. One of the key things that a lot of traders access is, how we should set up our screen and what should we be doing. One of the keys is that at the end of the day, it's going to be up to you. You're your own spaceman here. You got to walk your own walk, and we're going to give you some tips along the way, but at the end you got to find what's comfortable to you. So let's begin tonight's class. So of course, the first question that many traders ask us is, do I need multiple screens? Do you even need to have 2, 3, or even 4 screens, maybe even more? I have 4 screens when I have my full setup. I started off with 1 screen, then moved to 2, to 3, and then to 4. But I've done and traded on both sides. And one of the key things is I've done some kind of on the travel trading. And when you travel trade, you can hook up to a television, a TV, but at the end, you're going to have that 1 screen. When you get to that 1 screen, what you got to notice is that there's going to be pros and cons to everything. So when we go to that first screen, the pros for having 1 screen are you're going to be able to focus on selective stocks. You're going to be able to focus on just probably about, it depends. You probably have like 3 charts, if you want a bigger, or maybe 4. But you can't, be flipping through things. You're going to keep it simple. You're going to be able to stay focused on that 1 or 2 stocks that you're looking at, and you don't have to look elsewhere. So you're going to have to take away some of that confusion that can happen when having multiple screens. One of the pros is that at the end of the day, when you have 1 screen, you tend to trade a lot more mechanical. You don't tend to think so much, because you can't see so much. You just go with what you see. Of course, with 1 screen, there is going to be the negative side. The negative side to the 1 screen is going to be that it limits the stock charts. Of course, we all love to have, 5, 10, 12 charts, but, on 1 screen, that's just not physically possible. So the negatives can also include that you can't have multiple scans or alerts. You're probably only going to be able to have 1 or 2 scanners and maybe 1 alert. So that way, you can't really decipher through too much market information. Another negative is going to happen is that you can't follow as quickly with multiple charts, because if you have multiple charts, you can kind of just look with your eyes and look at that next chart that you're looking at. But when you only have 1 or 2, maybe 3 charts up, and you're just flipping through screens and flipping through stocks, you're going to not be able to follow as quickly, and you're not going to be able to snap on to when the stocks kind of get that momentum push. So of course, I use multiple screens. We talked about first 1 screen, but let's talk about multiple screens and how it really can help. One of the pros of multiple screens is that it can have 8 to 12 charts. When you have multiple screens like I do, I sometimes have 14 charts up. It depends on what kind of day. There's days where I want to see more stocks than others. But a lot of times what I use is I have a lot of the stocks in that certain sector, so that I can watch that whole sector move, see how the sector's moving, see if there's any outliers, or if they're all moving in a certain direction. One of the pros, of course, is that we're going to be able to have multiple scanners and alerts. John and I use gap scanners, high-a-day scanners, volume scanners, price alerts, tons of different alerts and scanners that we have on our charts and on our screens. And the only way we can do this is because of the multiple screens. Of course, I like to use multiple time in sales. And so that's also going to be another pro. Another pro, of course, is that you can have our chat room open. You know, a lot of our screen space can be kind of wasted if we only on one screen and then we're using half the screen for the chat room. You know, that's actually a negative, you know, but when you have multiple screens and you're just using some other kind of screen space to the right to get that chat room up, you're going to have a good addition of information. And that's why we use our chat room. You know, at the end, you know, when you have multiple screens, you're going to be able to switch through charts and be able to see, that was supposed to be see, and be able to see with bigger charts. Because at the end of the day, what we want to see is sometimes, hey, no one likes to look at a little chart. You know, you can't really see the candles big, and the bigger they are, I felt, you know, you can kind of see the chart better. You know, this is really subjective. You know, at the end, I've traded very well, traveling and trading from one screen, but you can have multiple screens and really have some success. I think it's kind of a method. You know, if you can't handle too much information, you know, we get into the negatives here of the multiple screens. You know, it can really become overwhelming. And you can even miss moves because you're only watching one screen. You know, it takes a little bit to get kind of adjusted to trading with 3, you know, 4 screens. I remember when I first put my third, it really got a little confusing. And then the fourth, you know, I was already kind of adjusted, but now I had this massive amount of room. And it was more, where did I want certain things so that I can focus on the things that I need to focus on, and then have certain things on the side that I can kind of scan when I'm just looking around in the market. One screen, you can have some pros. That's one of the keys that I wanted to show tonight, is that you can have pros and negatives with both sides. And then laptop to TV hookup, there you go. I've done that actually. That's how I first moved to a second screen. I would just have charts on that TV, and then I would have my kind of trading screen. That's one of the things I do also, is I have one screen that I call like the trading screen. This is the one screen that I want to focus on when I'm actually trading. I don't want to be looking at 2 screens when I'm actually in a trade. I want to be focused on one screen and narrow down. So let's continue in tonight. So tonight, let's take a look at some of these kind of setups here. And you guys go ahead and comment on what you guys think here. Here's a nice little 4 monitor setup. Not too bad. I like the vertical ones. I personally have 2 vertical screens that I use. Of course, they're not vertical, but I set them vertical so I can set them up just like this, where I can have an order form and a chart and have multiple screens like this working it out. And of course, you got to find what works best for you. You know, it can be simple or complex with many screens. This was my 3-screen setup. I now have the same kind of screen on the opposite side, kind of a mirror, where I have kind of the whole thing filled out. But even 3 screens right here was more than enough. You guys can see multiple screens there, multiple alerts, and that way I could go ahead and focus. You know, this is my baby right here. You know, I built her up. She cost me about, you know, with all the parts including, about $1,200. You know, and it's a good computer there. And some good monitors. I have 2 24-inch screens. They're Acers. They're very bezeled. One's flipped, so you can kind of get no kind of seam in between. I don't like it to have that real bracky look, kind of like it to look like one big screen. With mine, I really wanted to be symmetrical. And so I thought about it when I only had these two screens. I had the 224 screens and I had them side by side. And I kind of did my research and realized this 27 would fit beautifully right in between it vertically, you know. And I saved up for the next year and got the 27, and it, you know, I couldn't go wrong. You know, the following year, what did I do? I grabbed the other one. And so now I have my full setup. You know, sometimes it's going to take a while, you know, that just to show you guys, you know, it's not, you know, fast paced. You don't have to rush to it. You can start with one, work your way to two, and then work your way to three, and then eventually you'll get that fourth. So let's get into something else here, and really about setting up our screens. You know, when you're setting up charts, you know, whether you're setting up on Thinkorswim here to the left, or you're setting up here on TefTrader, you know, you really got to know how to set up your charts and how you're going to go ahead and continue using them. Whether you're going to use studies like a moving average, like I'm doing here, you can see the blue line in each chart represents the 9 EMA. I use the 9 EMA to judge quick trend reversal. And so one of the keys is I want to watch the stock come below it and hold the 9 EMA. When it's holding the 9 EMA, it's going to give me an ability to look out for reversals. And I like to use, of course, the VWAP. You guys can see the VWAP here, yellow on both charts. And what that gives us an ability is, of course, to run our favorite strategy, our VWAP fade. And you have to know what you like. You know, some people like the intricate, you know, Thinkorswim charts. You know, these are really good. They're really symmetrical, and you can see it a lot better. But then again, you know, some people like the TefTrader. You know, I like TefTrader a lot because it resembles a lot what I used to trade on, which was DAS Trader. And DAS Trader has a very kind of simple data look. It's very simple, generic, but I feel it works quicker than kind of these kind of display charts where it displays it a lot more in kind of a pretty fashion. But at the end, that's my opinion. I know John is much more of a fan of using the charts on Thinkorswim than using the charts on Tefs. And that just shows how it's definitely up to you and your personal preference. But of course, find out what works for you. And if you want to use both, you can use both. I actually have used both and continue to use both. I trade my main screen with my TEF charts, and I have charts on the side because I love the way Thinkorswim does when I do multiple charts. That is one advantage I think Thinkorswim does have, is you can use this button up here, right up here. I don't know if everyone can see that. I want to make sure everyone can see that. This button right up here, you can click it and make it as many charts as you want. I think it can go up to as many as like 15 charts. And so the cool thing is you can change the pattern. And that's what one of the things I like about Thinkorswim is that you can have multiple charts. Tefs, you can have about 8 or 9 charts up maximum. Of course, one of the coolest features that we use and tools that we use is our trade ideas. You know, trade ideas is kind of a little hefty to pay. I don't suggest it for everybody because not everybody has the means to be putting out, you know, $100 a month for a subscription. But by saying that, I do agree that it is the best scanner alert system out there right now. It's been that way for the last 3 years, and it continues to be that way. They're the fastest. They give you ability to get directly into their API. For you traders that don't know what that means, is if you do kind of get into that auto trading where you got logarithmic trading. You can use their API to get the information and alerts that you need. That just shows that if computers are willing to use their APIs, that the speed and alert system that they have is world class. So of course, there's all different types of scanners and alerts that Trade Ideas has, and they're completely customizable. You know, whether that's making, you know, price alerts or coding your own scanners, like our High of Day Momo scanner, or it's using one of the many prefix scanners and alerts that Trade Idea already gives you. They have, you know, marijuana stocks, stocks that are moving down, movement, trading the gap, you know, low flow, swing ideas, even surging stocks. You know, these are preset channel bars that they give you, and you can use those and kind of customize them yourself to changing it to your price range or the kind of relative volume that you want to see. Of course, we have our own kind of scanners and alert. We have our own gap scanners also that we use, and we are more than willing to share those with you guys so that you guys can use them for yourself. Once again, Trade Ideas isn't for everyone, but for those that have the capital, I definitely suggest it. I wouldn't trade a day without it. It's kind of my favorite tool. So of course, guys, one of the real key success factors that I do is using 2 order forms. I can't stress it enough. I'm not sure, John doesn't always use 2 order forms, but I'm sure he has 2 order forms open. I know I can't live without it. I think it's my favorite way of trading. It gives me an ability to be ready to get out on one side and also cover my rewards, because at the end, we're trying to get our rewards. We want to be able to get in and out of trades easily. That's our main focus by using 2 order forms. You know, one way is to have 2 order forms. One is for selling or covering your position, and one is for those reward targets. This way, you don't have to worry about changing the price in the limit order box, so that you're kind of like, oh man, no, I got to cover, or no, now I got to cover and get my reward. And then you miss your spot because you're trying to catch up to the limit order. It also gives you an ability of having 2 share sizes ready. Let's say if you wanted to do sell half on one box and be ready to sell out of the full position if your risk gets hit. Let's say on the top box, I could have to sell 500 shares and I have 1,000 share position. And on the bottom box, I'm ready to cover if needed with that whole 1,000 share position. This can get very complicated if you only have one order form. If you only have one order form, you're gonna have to change the shares, you're gonna have to change the price, and by this time, you're gonna miss the spot that you wanna get out on. Whether that be on your reward or on your risk. So if you're a trader that uses, you know, trailing stops or even just regular stops, this can also be very beneficial, because stops are meant to kind of just be an automatic risk ender. Yeah, you can get kind of killed by the market makers by having stops and trailing stops. That I will let you guys know, as this kind of class tonight is also on tips. I personally don't use stops or trailing stops, but what it can be beneficial, because you can cancel that trailing stop in one order form and also take your reward in that other order form. So by hitting cancel on just one order form and then clicking, let's say, the cover on buying your shares back on the other order form, you can cover in a matter of, you know, milliseconds. And one of the keys of two order forms is that you can limit the size by taking some of the level two down, and it will simply be repeating. One of the key things is you could actually get this top window, take the bottom of it completely off to where it's to the buy. You'll get rid of the level two, but the box will be smaller so that you can fit it in your screen. It's very important to fit it in the screen. And if you got to take the level two off of the second order box, take it off. You can pay attention to it on one box, and it's going to be the same level two. Another key use for two order forms is to use it for entry. Let's say you want to set up two prices at different share size. So if the stock is jumping up to the VWAP and you think that the stock can get to 40 or maybe 45, maybe you set up 500 in both order forms and you have one order form out where you can put that order out at 40 and you can be ready, or you can put the order out at 45 and you can be ready to add to your sizing at 40 if needed. And so that's how you average into a position. And the best way to do this is going to be, of course, with the two order forms. All right, guys, let's get into the next major part of tonight. I think it's right here, guys, using two or more time of sales. I can't stress enough how important this was for me as a trader to understand this and to really kind of start capitalizing on this information. The market can deceive us in many ways and will. One of the best tools I use is by filtering out by using the time and sales. I do this by selecting a filter of 2 or 3 boxes. Box 1, you see here, is going to be all the trades going through. These are actual trades that have gone through the market. Box 2 is going to be a kind of small cipher. It starts getting into that medium sizing. I want to see 1,000 shares or more in this order box. So I want it to slow down some. Instead of having this massive amount of noise that's coming at me, I want to be able to focus in on the medium or bigger sizing that's going through. And then you get into box 3. Box 3 here is the large sizing box. Why would I want to know large sizing, guys? Does anyone know why I would want to know large sizing? Let's see if anyone knows in the chat. Volume, you got it, man. You got it, Glass. Definitely, that's what we want to know. We've got to know the volume. There's nothing better than it. Volume creates momentum. The only true indicator of momentum is volume. Volume by relative, you can definitely see the move and the momentum come into the stock. One of the ways that we're deceived in the market is by the level 2. So traders have to develop one way to kind of counteract this. And what I did is I developed an idea. I said, well, if the level 2, can kind of fool me because people put up these orders that they don't really want filled. Sometimes, I've been guilty of it too. I'll put in an order above where I think I'm going to actually get filled, but where the market maker shouldn't even take my trade. I would get a really good price and go the opposite direction. And so one of the keys is that you can force or trick traders to getting into a trade. And so the level 2 can deceive us here. So what are we going to do to counteract this is we focus on the time and sales. The time and sales cannot deceive us. The time and sales is actually trades that have gone through the market. And here you can see the exchange. This is the actual exchange that it's passing through. And so one of the keys that I learned is if we use them both, that's really how we start trading better, is that we use the level 2 and then we use confirmation from the time and sales. So it's kind of like I'm going to throw a whole bunch of noise at you on the level 2 and you have to decipher it where? On the time and sales. So if you're going to decipher this, how are you going to decipher so much amount coming at you? You want to split it up into 2 or 3 boxes and separate the volume so that you can see where the big buyers and the big fish are. Because where the big fish are is where the trade is usually always going to move. Yep, definitely. And you see me do the cancel before. It works. I mean, it works in tests, even where the trades aren't really going through. Maybe maybe it's just a kind of a fake thing, but I've done it on DOS where it's really going into the market, and it's just how the market works. If you force the demand in one direction with so much sizing, it's going to continue going in one direction. And so it's until that kind of sweep of momentum that the other side is willing to take that price that we get that reversal. So we're using that to really kind of master the time and sales and decipher all the noise that's in the market. This is really, truly one of my best skills that I've developed in the last year or two, and what I want to go ahead and continue to develop, as I think this is how you really price action trade, and you understand where the price action is coming. But in the end, you got to determine what works best for you. This is kind of my top screen. It's not really, the everything screen, but I'm able to use this screen and trade anything I want. One of the key things that I like to do is I like to have a daily chart right above the chart that I'm trading. Why? Because we all know that there's nothing more strong than a daily resistance or a daily low. And so I love to pay attention to these to find the overall move of the stock and sentiment. And so that's why I use 2 charts here. You guys can see my multiple time and sales. 1, letting all the noise come through, and 2, only showing me the big sizing. Why? Because this is where the big shorter and buyers are coming in. 614 and 615. All this in between, I don't care about. I only want to know where the big boys are, the big fish. One of the keys I used to talk about, or kind of quotes that I say, is that we're in a game full of cats. There's the big cats, right here. These are the big cats. But at the end, the game is really full of mices. And these are the mices. This is the mices. We just take our little snippet of the cheese and we run. But where we got to really worry about is when we got a cat behind us. Because the cat is the one that we got to worry about. The cat can get us. So we're going to worry about the big volume and focus on that time and sales. You guys see the 2 order forms here so that we can master our in and out capabilities. You want to be able to master your execution, and this really is going to get you to that next level and get you to that part where you can really master. And of course, you want to have an ability to have a top list so that you can know the top movers. You want to know a market watch. You want to go ahead and put your watch list. I love the market watch list from Tefts. You can just click right here, fill in the stock. Thinkorswim has just the exact same, where you can fill this in for whatever you want to look for, and you can make your watch list and keep an eye on all the stocks that you're looking for. Especially for you traders trading with one screen, I definitely recommend having this screen. It's going to be better than watching all the charts. You can find what is actually moving here, click on it, and get to that stock. So of course, guys, thank you guys for staying with us. But of course, like always, we got to keep working hard at what we love. And if we're going to get there and take those leap of faith, we got to go ahead and continue working at trading every single day. Understand that you can get better. You can work at your craft. You can focus on your strategy, define who you are and how you're going to trade, and stick to it. All right, guys, that's going to do it up for today. I hope you guys enjoyed tonight's class, and I will see you tomorrow to trade